Welcome to ShortView Trading, it's your morning market hit for Wednesday, 19th of August. What matters today for traders? So despite low traded volumes once again in the S&P 500 E-mini contracts, as you can see in the chart in front of you now, the index managed to eke out further gains. With that, the S&P made a new record all-time closing high above the closing high we saw in late February, just before the pandemic-induced sell-off. Intraday not quite there, but very close, within a few points as we speak at the moment, at the time we're recording this in the morning. The Nasdaq was similar, new intraday and new closing highs. And of course, what's been driving those markets is excess liquidity. You can see that in a number of indicators, perhaps most obviously in the US dollar. Dollar weakness is an indication of plentiful liquidity. Dollar tightness, of course, is consistent generally with risk aversion and tight money. So as you can see in the chart in front of you now, we've had renewed dollar weakness over the past few trading sessions, albeit it's interesting to note it's not yet at an oversold level. Other liquidity indicators include the continued strength we've seen in Bitcoin, a re-acceleration in that asset price in the last few weeks, making new multi-month highs, and also some renewed strength in gold and silver in the last few trading sessions after they give back a couple of weeks ago, having made highs earlier this month at the end of July. Liquidity indicators are supporting this rally, indicating that liquidity is plentiful. That dollar weakness, of course, is supporting US indices, in particular sort of liquidity sensitive Nasdaq and the S&P 500. And in that respect, of course, it's interesting to look at the correlation between Bitcoin and the S&P 500. Bitcoin often leading at key turning points over the last few years, whether you're looking at the December 2017 high in Bitcoin and the Jan 2018 high in the S&P, or indeed the reverse back in December 2018 as well. Often Bitcoin leads, it's a liquidity indicator. Liquidity drives markets as one of the key component parts, driving markets higher or indeed lower when there's a lack of it. But despite those US indices making new highs, it's not the same in other parts of the global financial landscape. Many other parts have struggled in the last week or two as we've seen risk appetite unwind outside of the US. If you look at the DAX, for example, it's given back over recent trading sessions some of its gains, and consistent with that, it's moved very much in line with our risk appetite scoring system. The DAX, other European indices, parts of Asia like the Kospi in Korea, and indeed parts of Latin America have all been giving back some gains recently. And with that, of course, we've seen risk appetite models rolling over despite new highs in the S&P and new highs in the Nasdaq. And with those models rolling over, the attractiveness of the short side is therefore diminishing. For full detail on how we're playing this market, please see today's daily rag, available to subscribers via the website. So what are we watching today? Well, it's a fairly light calendar, but you've got European inflation this morning. That's always interesting, particularly at this time when there's a big debate surrounding the inflation outlook. Added to that, there's more housing data out of the States. It's been punchy so far this week. Today we get weekly mortgage applications, and then finally we have the Fed minutes later on this evening, London time. So that's it from us. That's your morning market hit for Wednesday, August the 19th. Please do subscribe on YouTube. Simply search under ShortView Trading, or follow us on Facebook, Twitter, and or LinkedIn. Thank you for listening. Stay safe. Trade well.